episode is about another case study video, another performing note with equity. It is hard to believe we've got 774 episodes of the podcast. Wow. Keep cranking them out. Keep listening. We'll keep sharing some information. But this is another performing note. This one is in Harrisburg, Pennsylvania. It's not a bad looking little property. Now, where is Harrisburg, Pennsylvania? It's not quite out in Philadelphia, Pittsburgh. It's kind of a little bit in the middle of that 40 months. But this house has been around for a little while. It's not a bad looking property. It's on a row house, 2-story, very common in Pennsylvania area, owner occupied. I actually believe it's a duplex, but I'm not 100% sure on it. This was originated in March of 2008 at $35,000. It was basically a 21-year note. Current UPB, unpaid principal balance, is at $21,000, so they've paid it down a little bit over the last 15 years. Interest rate is at 6.9%, so a little bit more in sight with current rates, a little bit low, but still at 6.9%. P&I payment of $355.74, so just under $356 a month. Current fair market value, here's the nice thing, is $96,000 on the conservative side. So the borrower's got roughly $75,000 in equity on this deal. That's why they keep it paid. It's a 5-bedroom, 1-bath, 1,890 square foot, 2-story house. I even think there might be a basement, so I think it's more a 5.2, but I'm not 100% sure since I'm not in the house. Okay. Now, this matures in 6 years, May 2029, so just under 6 years. So it's a shorter term time frame on the note. A lot of equity. Borrower's been paying on time for a period of time. And I went back and when I looked at this and said, okay, same thing, lower balance, lower UPB. I got some servicing costs. I've got to make sure that if I'm going to be borrowing funds on this deal, that I can pay my investor off in probably 3 years, hold it for cash flow for 3 years and sell off. So I offered 50% of UPB right at 10 grand on this deal. And that's the highest I would go on that. So you got to realize, like I said, just because you borrow money is great, but you got to make sure you make your investment back. Now, ideally, I would probably use this deal and fund it with my self-directed IRA. I have an offer in at the 50% of UPB, 10.5, I think is what I've got it in at. Waiting for them to respond back. Do I expect them to accept it? Probably not. They probably want closer to 83 cents on the dollar, which I just thought was stupid. Totally stupid at 83 cents, because the fact is it's only 6 years left. You're going to pay off that relatively quickly. And if you're paying at 83 cents on the dollars, if you take 6.9, oh my goodness, 6.9% times 0.83, you're only going to, times 0.83. You're only going to see probably, about an 8.3% yield at that type of number. So it just doesn't make any sense unless, it's barely keeping up with where numbers are at. So now at 50 cents on the dollar, I get more excited about that, because then it's worthwhile for me to put that money in. It makes a pretty good return. So 355.74 times 12 is equal to 42.68. If I divide that number by the 10.5, that's a 40% annualized return the first couple of years, which is pretty good over 6 years, right? And you would want to drop this number into your financial calculator, take a look at it. But same thing, kind of like our previous deal, a lot of emotional equity. If the borrower doesn't perform, I'm going to get paid off. Now, I don't want to pay 83 cents a dollar. I want to pay upwards of, 19,000, some change and stuff. It doesn't make sense. Actually, it just doesn't make sense to do that unless the borrower is willing to deed the property and walk away. And they're not going to do that with that much equity. They're going to fight to stay in the house. You foreclose, you're not going to get the property back. It's not a contract for deed where you could evict versus foreclosing. This is a true first lien. So, same thing on this. I did ask who the servicer was. I did ask if taxes and insurance were escrowed. I hadn't gotten an answer back on that. And I honestly don't expect them to accept 10.5, but that's where I need to be to make it worthwhile if I'm going to be tying my money up for 6 years. Now, could you borrow somebody's money? Yeah, this would be a great little deal to borrow somebody's 10 grand. Even if you borrowed 15 grand, let's run the numbers at that. 355.74 times 12 is 42.68. All right. That's pretty good. 42.68. Now, if you're borrowing 10 grand at 12%, you're only paying $1,200 a year out. You're still netting $250 plus positive cash flow, right? That's pretty good. But same thing, You got to make sure that you're not paying down the loan faster than and at a price point that goes below what you owe your investor. So 21,000 current UPB, but that number is dropping with every payment they make because a lot of it's going to principal versus just interest now. So that's the thing. You want to run this through an amortization table. 3 years would be about the most you'd want to hold it, unless you're using your own funds and your own self-directed IRA to do that. You don't need a license in Pennsylvania like you would in Georgia and some of the other places, as long as your third-party servicer is licensed to collect debt in that area, and you should be good. But I think this is a pretty slam dunk little deal if you can get it at a discount that makes sense for you. I'm a little greedier at 10.5. Maybe you pay 15. I'm waiting for the counter back on this deal and go from there. But this little deal's not bad. Just you got to spend some time on it. You got to work through it and make sure everything looks good on the servicing, complete payment history. But the fair market value of 96 and the only current UPB of 21 is the thing that stands out the most. Ton of equity, emotional equity. And it's kind of at that pace, like I said, 6 years. You could use your own money. You could get away using somebody else's money, but you'd be safer using your own. So if you'd like to find out more deals like this, feel free to reach out to me. Talkwithscottcarson.com. And these are kind of the deals that we're going to be going through in our upcoming 3-day virtual workshop slated for the end of July. So you can get a discount ticket right now by going to notebuyingfordummies.com. That's notebuyingfordummies.com. And get signed up, and hopefully we'll see you in Austin, Texas for 3 days of how to find, fund, flip, and flow non-performing notes. Thanks for listening as always, guys, and have a great day.